Okay, good morning to everybody. Thank you for being here. For us, it's a real honor to be here in this Ocean Pavilion. My name is Jan Pachner. I'm Secretary General of the One Ocean Foundation. And we are based in Milan, internationally active now since 2017. And we have this great pleasure and honor to host this panel. And we're talking about blue business opportunities. I'll get a bit more into depth on what we define as blue business opportunities. One Ocean Foundation has started a research about 5 years ago, together with some partners on Bocconi University, McKinsey, and you hear me? Yeah? Oh, okay. This went off. Okay. That's all right. Doesn't matter. Doesn't matter. Doesn't matter. Okay. Sorry. And but before going into depth on that subject, let me introduce the panel that I'm honored to have here with me today. Let's start with ladies first. Nathalie Hilmy from the Centre Scientific of Monaco. Thorsten Thiele from Aura and Global Ocean Trust, but I'll let you then go into more details, my panelists, to give your interactions on your bios. And Mr. Rama, basically, thanks for him that we're here in the Ocean Pavilion. He's basically hosting us from Woods Hole Institute and a lot of long biographies, but I'll let you maybe to introduce yourselves quick before we go into the depth. Nathalie, do you want to start first?
Hello, everybody. I'm the section head of environmental economics in the Monaco Scientific Center. And I'm also IPCC lead author for the special report on the ocean and the cryosphere and the main report AR6 Working Group 2. I work mainly on the ocean, but not only, about blue carbon, blue economy, evaluation of ecosystem services, and so on.
Thank you very much, Nathalie. Great to have you here. Thorsten?
Good morning, Thorsten Thiele, Global Ocean Trust. I have a background in finance, and about 10 years ago, I felt that the ocean is really the largest opportunity and the most challenged space from an economic and financial perspective. So I've been focusing on trying to identify solutions in that space, opportunities. So it's on the one hand what I would call the economic side and work that Nathalie has done and others around what is blue natural capital, how can we define investable opportunities based on restoration, recovery in the marine space. It's a huge part of how the Earth system works. We need all the science we can get. We have great partners on that side. How do we use that science to make better? Also means we need investment pathways. And so I have worked with a whole group of organizations, for instance, with the International Union for Conservation of Nature. We set up the Blue Natural Capital Financing Facility to identify and support through grants specific projects in coastal ecosystems, coastal communities that could over time become bankable. We set up, and I'm now the senior advisor on blue finance for the Ocean Risk and Resilience Action Alliance, which is a cross-sector alliance of both financial companies, insurance businesses, governments and NGOs, because in particular in the direction of small island development states, it is absolutely key that we help them find ways to adapt, to build resilience, but do this in a way that is long-term financially sustainable and stable. And that's why it is bringing those public-private partnerships actors together. And that's a key focus of my work.
Thank you very much, Thorsten. Rama.
First of all, Jan, grateful to you for organizing this panel and for the invitation to speak in this important session. Knowingly or otherwise, you have managed to bring three people with highly complementary but very diverse backgrounds. We have a scientist, we have a person who specializes in finance, and my background is in governance. I'm an international lawyer, and I work at the Woodsole Oceanographic Institution as director of the Marine Policy Center. But then I come to this issue of finance and then blue business from a number of different angles. I first worked on land-based issues. Now I work on marine matters. And oftentimes when we come to meetings like this, we come as civil society groups, environmental organizations, and so on. So the environmental community has evolved over the period of the climate negotiations. They started first looking at anything to do with business or making money as a no-no. We are purists. We want the governments to act on it. We want the governments to work with us in finding what is right for the world community. That evolved. Now they see that neither they can solve the problem, nor governments can solve the problem by themselves, whether it is finance, aid, whatnot, or in terms of solutions. They have to rely on technology, they have to rely on entrepreneurs, they have to rely on basically innovation to find new solutions and new ways of doing business. And so what you're trying to do now is, I think, through this panel and various discussions that are taking place here, is really getting to the nub of it. How do you ensure that the environmental community that wants the climate to be, the temperature to be within a certain limit, as Paris Agreement talked about, and for the countries that need to do this, the avenues that they can work with to make that possible. So the business opportunities, the blue business opportunities that we talk about is absolutely vital, and I'm delighted to not just participate in it, but to learn from all of you in terms of how that works, and most importantly, how do we increase the comfort level of both environmental community and community that generally looks at business as motivated only by profit and nothing else. Thank you.
Thank you very much, Rama. And exactly this is what we'd like to highlight, that there is examples out there on actually where business has a positive impact on nature, can have a positive impact on nature. But before going to the positive message, let's start with a more critical one that I started to introduce a bit when we came from basically in the first 5 years, where we as One Ocean Foundation have started this study on the impact of the industry on the ocean environment. And since 80% of the issues that we are facing on the ocean environment are industry related, 90% are land-based related, we don't really have that time. We spent now 30 years on discussing climate change, and we're feeling already the first, unfortunately, examples of how the climate is really affecting us. And so we don't really have that time frame to discuss about also in the ocean, because obviously, as we all know, the ocean and the climate, everything is interrelated and interconnected. Unfortunately, SDG 14 is one of the least reported UN development goals, and also one of the least financed development goals. So we really need to drive that push and show how all of that is interconnected. And our study shows that basically the impact from the industry can either be direct or indirect. So I'll give you a couple examples. Obviously, fishing has a direct impact. You take the fish out of the ocean, and you're having a huge impact. Unfortunately, if we look at our fish stocks, we all know they're dangerously affected by overfishing or illegal fishing. But an indirect impact, for example, let's talk about textile industry. Textile industry with all the fabrics, microplastics is an indirect impact, but sometimes the indirect impact is even worse than the direct impact. So from our studies, what we found is basically all industries have an impact on the ocean environment. So the ocean is just downstream. And so we really have to, that's why we really wanted to focus on the industries themselves, on trying to talk to them, to make them aware of their impact, because many times it's even an awareness issue. A lot of industries are not even aware of their impact. And so I think once you're aware, then you can actually make actions to avoid these pressures. And so we have been, 2025, sorry for that long introduction, but I think it serves as preparing for the later panel discussion. We will introduce the first disclosure framework for the industry on ocean impact. We were quite surprised that during our studies we found that there is no reporting standard for the industry itself on ocean impact. And so while the industry has formulas on calculating the greenhouse gas emissions, CO2, there is a magic formula that works for all the different industries. Unfortunately, ocean environment is much more complex than that. And so we had to go really vertical industry by industry and trying to find out what are the different KPIs, because I cannot compare the impact of textile industry to oil and gas or to fishing. It's completely different impacts. And so we have been working on this and we'll introduce in 2025, so watch this space. It's called Ocean Disclosure Initiative, and we will roll this out, and so it should be the first disclosure framework for the industry to really help them to be aware of their impacts and also how to mitigate them and create some baselines. So with this introduction, I would like to come back to the title. We're talking about blue business opportunities. So I hope that with that introduction I opened up a bit the scale. So I'm not talking about blue business opportunities as only ocean related, but I'd like to talk about blue business opportunities to all kind of industries that actually are aware of their impact on the ocean environment and how they want to mitigate and how they want to mitigate this pressure. So this includes, for example, also agriculture, right, which is definitely not an ocean industry, but it has a huge impact on the ocean environment. And so maybe in the discussion we would like to sort of highlight on different examples that are out there, using nature-based solutions as one of these sort of principal guidelines. And so let me start with Torsten on some examples that during your work on financing big projects or looking also at countries, maybe also coming back from the latest COP, we had some discussion on biodiversity. What's happening out in that space?
So I think that was really helpful framing, because one of the key pathways that I see large financial flows happening into the nature, biodiversity and marine space is really through an understanding of how nature-based solutions can be used for what I've referred to as corporate insetting, as how corporate value chains actually functions. Like that? Is this clearer? Excellent, thank you. So if you think about corporate value chains and the supply side of those value chains, you as a corporate want to be sure that your sub-suppliers meet the right kind of standards, deliver on positive outcomes for nature, and deliver the products that you need inside your value chain. That is a physical issue and it's a reputational issue. And as climate change affects all these suppliers and sectors, it's really important to understand, disclose, and invest into that stability. So nature-based solutions, i.e. using coastal natural ecosystems as important adaptation and resilience components, need to be thought of in that context from a corporate point of view. Now, the financial sector has a really interesting opportunity to engage with corporates on exactly this issue. So one of the first things we did on identifying ocean risk as a meaningful approach was to work with the largest investor in the world, the Norwegian Sovereign Wealth Fund, to help them as they identify which companies in their portfolio have significant ocean risk, are exposed in various ways to ocean ecosystems, and then engage between the sovereign wealth fund as the key investor and these companies about an understanding, a disclosure, a management of these kinds of risks. So that's a really important pathway. A second important pathway, and that links to the outcomes both of what came out of the Cali Biodiversity Summit and some of the discussions here, is to think about categories that financial investors are traditionally comfortable with. Financial investors think in terms of traditional asset classes. And one of these asset classes that they are both familiar with and investing very large amounts in is infrastructure. And so the infrastructure space is in itself quite affected by changes to coastal resilience. So as you reconsider over the next 20 years where infrastructure investment goes, we're talking about a number in the range of 80 trillion plus of investment, so a very large amount of money. If that is invested aligned with nature, aligned with positive climate outcomes, aligned with the needs of coastal communities, that has a huge shift. So understanding, integrating the nature-based solutions into those infrastructure projects is absolutely key. So if you talk about a new port development, how are the wetlands around the ports considered? Are they part of the solution to the management of water? Are they part of the solution to local biodiversity? Are they part of using the opportunity for local communities to engage? Or are they sort of set apart? Do they create more problems than they help solve? That is a really important integrated approach. So we have here just two examples of pathways how finance and investment approaches directly link to a much better understanding of where natural capital sits and how it can be used and how it can be validated, because we are making progress on valuing it at a granular level. We need to validate it in terms of these financial investment approaches, and we need to build the financial structures and institutions that are particularly focused and capable to do this sort of work.
Thanks very much. I think also very actual, especially on when we see on the infrastructure failures or infrastructures that are not there yet, but they have to be there when we talk about resilience on all the different impacts that we see through bad weather storms, etc. I think throughout the world. So thanks very much, Thorsten. Natalie, some examples you would like to mention on nature-based solutions that you have come across so far?
When we talk about nature-based solutions, we also consider the ocean, of course, and the blue carbon. When we talk about blue carbon, it's not only the coastal vegetated ecosystems, but also the open ocean and the deep sea, so everywhere in the ocean. I think it is important to consider those nature-based solutions because it is 1/3 of the solution for climate change. If we protect the nature is going to protect our planet, our health as a human, our well-being as well. So this is why it is interesting to invest in the conservation of those ecosystems, because they will protect us. For example, the mangrove, the seagrass, the salt marshes, of course, and the open ocean.
It opens up a question on, often we hear that there's a huge gap on science, on the knowledge factor. I know, Rama, with Woods Hole, you're probably the biggest institution out there, employing more than 1,000 scientists and oceanographers. That race to sort of close that gap. I mean, when we hear statements where we know much more about the surface of the moon than actually mapping our oceans, where we're maybe at 20%, or the gap of science that unfortunately probably is linked also to financing, I would imagine, and also the accessibility to the ocean environment, because it's not easy to go to a depth of 1,000 meters and beyond. So how is that? how is that evolving? Because obviously we need the knowledge also to deploy then nature-based solutions in a more conscious way.
Thanks, Jan. This really nicely connects with what you began by talking about the disclosure initiative and what Torsten had talked about in terms of financing opportunities. The challenge that first of all, you're absolutely right. We are the largest independent oceanographic institution in the world. But you talk about getting down to 1,000 meters is difficult, but we go traditionally to a lot deeper depths. We have a submersible that can take you down to 6,500 meters with 3 researchers in that. And we have a range of specializations and work, but they're mostly scientists. They're doing scientific work. When you talk about what is the possibility that whether it is seagrass or mangroves or anything like that to capture carbon, or even the ocean iron fertilization or ocean alkalinity improvements, they can tell you that. But you raised an important point about what happens on land eventually ends up in the ocean. And so in terms of figuring out what exactly, what we lack right now, if you allow me, I want to just go back a little bit and say, sure, when the first formal dialogue of ocean and climate change took place in the UNFCCC, what was clear, this was an open dialogue with all the member countries present. What was clear was that they had very little idea of what they have in their own marine environment, near shore and offshore. And so we need to be able to figure that out, and unless you know what you already have and the amount of carbon that is sequestered, you cannot say that we are going to X and that is going to sequester so much more. So first you need to have a baseline, and then you think about it. Then of course the impacts of the land on the marine environment also become crucial. Are they reducing it? Are they increasing it? And most of the times it is reducing it. So yes, we have the scientific expertise and knowledge about what is happening in the marine environment and what could potentially happen if we do ABC. But in terms of accounting and looking at making more of what we have and having that counted either in the nationally determined contributions, NDCs, or in terms of thinking about business opportunities, we need to have a lot more data. And without that, we end up in a circumstance where each country can claim to be doing so much good, or each business that is investing in it can say that they are making so much progress, but the overall situation remains under where you would like it to be. So it's important that I go back to your disclosure initiative. When you're describing it, it reminded me of the time when IPCC and OECD together tried to develop methodology on how countries might complete their national communications under the Framework Convention on Climate Change and the Kyoto Protocol. And those are detailed regulations, very specific to each greenhouse gas. And like that, the disclosure initiative has to be very specific to not only the type of industry, but the size of industry and the reach that it has. So we need to combine all these things to be able to really get a hold of what we are doing. So the last point I want to make is, it is absolutely vital that whatever that we do, we increase the confidence level of the people that we are in the business here to meet the Paris Climate Agreement goals. Without that, we lose them, and then that is going to impact adversely everything that we are trying to do here. Thank you.
Thank you very much. Huh? Like this? Okay. No, you introduced also some other hot topics. I think talking about the whole finance part behind it, and also when we look at potential opportunities. Like we had a discussion. We have for 3 years now organized the One Ocean Blue Economy Summit in Milan, talking about more specific issues like that. And one of the work groups that we've introduced was talking about natural capital as a new asset class. That's another topic I think that is floating around more and more. And probably, I mean, from my own talks also with some native populations, for example, when they hear about the topic, you know, they back off, because basically the last thing we need is putting a price tag on air we breathe, basically, you know, to exaggerate it. But on the other hand, we are living in the world we're living in, where, you know, it is finance driven, and could this be an opportunity? That's a question to the panel, of what you think on. Could this be actually that revolution or this opportunity that we're all waiting for in order to sort of equalize a bit sort of the global south, where a lot of that natural capital is still sitting, to really, number one, protect it, and protect it against sort of private companies coming in to sort of to buy it out and to ensure that they have what they need on you know, we talked about CO2 capturing, etc. And could it be sort of that opportunity for these local communities that a lot of the times, you know, the begging for money to IMF basically become sort of a bit the unfortunately the you know, the players of the game that don't have many cards in their hands, and if they could really, if this could be part of their balance sheet in the future, it would really probably be a potential game changer. What do you think about it?
If I may, I'd like to go first, because, you know, one of the things that I did way back when, as a young graduate student, is to talk about developing country perceptions on why they are in the international environmental movement. And the sentiment that is generally expressed is that they do not want environmental protection. You know, nothing could be farther from the truth. You know, they obviously want to meet their economic development goals, which is entirely legitimate. But then the kind of development model that we have is what is tried and succeeded in the Western world. And so in terms of the business opportunities that you're talking about, you know, if they can be transferred or transported to the developing countries, none of them would object to that. I mean, you know, so it is, you know, the so-called leapfrogging, you know, that is talked about.
Do you think the more industrialized countries or their institutions would somehow be afraid of that, because it could eventually be a game changer? Like,
well, I mean,
IMF, how would that see it? I mean, they're not part of the panel, but
well, yeah, I'll leave the IMF part to Torsten. But you know, the point is, there are, if you have a good idea, and then you say that this is going to meet their development priorities, you know, a shelter, education, roads, whatever that we all aspire to as human beings, and if you have a good idea that is going to do all that and also save and protect the environment, I don't think you would have any objection anyway. You know, so it is a kind of an unfortunate thing that is being said in these negotiations, that it is the developing countries that are opposing, you know, regulations and so on. But it requires financing. You know, this is called the finance COP, and the number that is touted is about $1.3 trillion. And, you know, how you're going to make that available. And it's not just money, but money to do what? Money to make progress on, you know, meeting the goals that each country had set for themselves. So I would strongly suggest that if you have a good idea, and, you know, Torsten talked about the nature-based investments, you know, I mean, if all the companies that are investing in this business move that route, I don't think you would have any trouble at all anywhere.
Thank you. Natalie?
Oh, yeah, maybe I can mention a project that I have on natural capital, because we have the produced capital, which can be calculated by the GDP. We have the human capital, and we have this natural capital. So the project is about how to calculate the wealth of the nations, including all those kind of capitals. And if we take the measure per habitant, we can see that the seeds and small island developing states, they are the wealthier. And because we consider their natural capital, meaning this is where we should also invest, but also it can reduce their debt, it can help for a lot. The problem is that we have stressors in the ocean, and it is usually we study the different stressors one by one: climate change, ocean acidification, and other stressors. So in Monaco last month, we organized a workshop, and we wanted to consider the multi-stressors all together. The global ones, like climate change and ocean acidification, but also the local one, like nutrient runoff, eutrophication, pollution, including plastics, and also the invasive species. So it was important to consider all the multi-stressors together to see how they can impact the natural capital.
Thank you.
So Natalie outlined this inclusive wealth approach and also highlighted that the point of doing these measurements is to be able to finance those that reduce stressors, that manage and conserve, so that the improvement in the natural capital is against which we measure and which we can pre-finance. So if you think about this in the different stages, we talked about the need for the granular science and understanding of all these systems. So we're talking the deep ocean, we're talking the coastal ocean, we're talking the high seas. In all of these areas, doing the work from science, from technology, from measuring is absolutely key for the system. So that is an investable proposition in itself. So for instance, if we were to put smart sensors on all new telecommunications cables, we would have a much better understanding of the system so that we can do those kinds of comparative measures, so that we can identify the types of investments needed, types of management measures needed. And this is entirely doable, it's entirely investable, because you're building this significant knowledge. You think about which are the companies in the traditional that are valuable. Those are data companies. Those are companies that use information to help people make decisions. And this is exactly what will happen in the oceans. So huge opportunity already at that first level. But then we have the outcome of that analysis, of that inclusive wealth analysis, because then the companies that will help manage and the communities that will help manage that wealth, they are delivering the outcomes and therefore sharing in the benefits. And so if you then go back to the very large investors, if I am a large asset owner, a pension fund, an institution, I need to think about where do I want to allocate money in the long term. And in the long term, I want money to be allocated to assets that are stable and regenerative, not to things that deliver some outcome now but don't survive in the long run. And that's why nature, including ocean assets, are so valuable to those institutions, but at the moment they don't know how to move their monies into that space. And that's why using this natural asset approach, we're actually creating that opportunity to move money out of short-term non-sustainable into this long-term sustainable regenerative space. And that's why we're talking about a sustainable and regenerative blue economy and giving that opportunity. And it's that shift. As we create that shift, we will have significant demand from these large investors as to where can they put their money in this space. And so that's the shift we're working towards.
Thank you, Thorsten. I mean, the the comment I hear often, I was on this finance summit in Verbier in January, and the common theme that I got from that was sort of nature, investing in nature is the new real estate, and so I think there is a shift that is probably going to happen, and there was a very positive feedback on sort of nature investments. But what are the missing steps? I mean, what do you think is still missing in order to get that to close that gap? I mean, also, the feedback from all of us is very positive on nature as a to see it on the balance sheet. But I mean, investors need trust, right? Is that the issue?
I think there are two issues. It's too short-sighted to think of it as if it is real estate. Real estate is about you control the property right. Nature and avoided loss is the opposite. It's about...
Just a second. I think the thing with real estate was more on the long-term investment, because real estate would be sort of seen as a long-term investment, right?
No, but what I'm saying is we're educating the financial sector to move away from that primary sense of ownership to that what I call stewardship sense. So nature becomes an asset class as stewardship, not as control, but as controlling your intervention so that nature can recover and use abundance.
Exactly.
And this is back to this concept of avoided loss. Why is it that we have such challenge investing in adaptation and resilience? At this COP here, we talk about mitigation, and much less finance flows into adaptation and resilience. And that is because doing something now that reduces future loss is more challenging, because we don't have a primary measurement of that benefit. We can't allocate that benefit to the party that makes that effort. Whether that effort is made by the local community, whether that effort is made by people on the ground or internationally, that avoided loss, that positive thing we do now, we need a technical way to measure it. And so we are working on a whole range of tools to do that. One of the tools is pricing through insurance. So the Ocean Risk and Resilience Action Alliance, we work with the insurance industry to help us identify the difference. If you'd made the right investment into mangroves and coastal resilience, you have less impact, negative impact from storm surge. How can we calculate that? How can we price that so that the money flows into those positive measures? And that is this one extra thing that makes this step a challenge, but also such a brilliant opportunity, because once we do it, we know that the avoided loss part is much bigger than the upfront amount part. And so this is a journey worth engaging on.
Absolutely. But when we mentioned insurance, one quick comment I want to throw in there is that calculation, for example, on if you're giving a value to a whale, right? We're talking about shipping industry, for example. I mean, how much damage do we do? Like ship strikes on sea mammals is today the #1 issue for killing sea mammals. Now, if we look at the percentage of the increase on the shipping industries, I mean, 90% of our goods are transferred on the oceans. If you see on the increase over the next 20, 30 years, it's almost foreseen even to double on the traffic. So there is things out there. If we are not careful on their impact, and there maybe insurance can come in as well, because all these companies, they have insurance on the vessels. If we realize that there is a value, that you're creating damage, like also economic value, by hitting whales, maybe these companies that include certain, like they take different routes, they drive slow on the boats, they put some devices on the boats to avoid ship strikes on the whales, on the sea mammals, they should pay less premium. So probably that is a translation also in economic terms on what could happen probably, or what should happen.
I think what Torsten said and what you said are pretty close to the point. I mean, which is that the upfront costs are the ones that you see. You don't see the long-term costs. And every time you have a massive hurricane damage, a storm surge, etc., all the development agencies come together and then say that we have to fix it, and then they spend billions of dollars on that, but then they would not do the same thing before in terms of building resilience to how you structure anything. And but we need to evolve to reach a point where we can actually think about upfront cost not as a huge investment, but as actually reducing the long-term cost that we have. As you know, I worked at the Green Climate Fund, for a bit of time, and we had it is in terms of what are the investable ideas. How do you take it from scholarship to reality? So we said, well, there are lots of great ideas that are not being tried by these investors, whether they're banks or large private sector companies. So we said, okay, give us your ideas, and if they are great, we will put it out. And so it was advertised in The Economist and various other places for $500 million, and the amount of proposals that we got were close to $18+ billion. So we finally selected few, but then those need to be then taken up by one of the accredited entities and then presented as a formal proposal for funding. Even then, there were some that were afraid that this may not really pan out. So we came up with the idea that since we believe in it, we came up with the idea that, okay, you go ahead and invest. If you were to suffer losses, we will make good on the losses. So there is no cost to you. So we need that kind of a thing in a more aggressive and broad-based manner to get these. But at the same time, I want to go back to the point that I made originally, which is, but you need to do this all in such a transparent way that people know that this is not some big banks and funds, coming together with private sector to do something, but that this something is to the benefit and is consistent with the environmental principles and helps us keep to the Paris Agreement goals.
Who do you think would guarantee for this? I mean, we're talking about these national assets being on the balance sheets of the governments, but I mean, if there's governments change, who would you think could be sort of? Would it need a sovereign fund of that country, sort of, to be a guarantee behind that? What do you see, Thorsten?
Again, Torsten would be able to say that, but we do know that France, for example, tried this idea of sovereign funds, not as putting out there, but saying that, well, we'll guarantee. We guarantee that if you were to suffer losses, we will make good on that. But, there may be more detail that you want to add.
This is a really exciting part of the work stream towards the UN Ocean Conference, because the gap that we've clearly identified here requires a whole range of open ocean finance architecture, which involves new institutions on a regional level, new institutions on the global level, and a connective tissue across those institutions based on common understanding, common language, common engagement. And so I think we're at a really interesting moment here where we're starting to realize that we need new actors that can help facilitate this transition and that create the dynamic. There's already a whole range of existing actors looking at this, how they can play a role, but they are constrained by their existing structures. So bringing in this new universe, we a few years ago looked at the big challenge of coral reefs and created the Global Fund for Coral Reefs as an entity that thinks globally about that particular issue and engages public and private money. We need to think this more comprehensively now, how we can achieve that transition based on these principles we discussed.
Thank you, Natalie. I know Monaco is playing quite a role on the upcoming UN conference as well, especially on the blue economy.
Yes. Yes, the Blue Economy and Finance Forum. I just wanted to add something about creating new funds. We can also create a new instrument, financial instrument. 15 years ago, I used to be a strategist in a hedge fund. And this is before moving to environment. And we know how to deal with uncertainty in economics. This is something we always do for plenty of things. And in finance, we usually work with a couple risk and return. And we can include the climate risks. This is what now I'm working with some colleagues in the finance to create new instruments that can help to protect the nature, protect the nature-based solutions for climate change. And this is not only the creation of funds, sovereign funds or private equity funds, but really a new instrument that can be on the financial markets and people can easily invest or include them in their portfolio.
Thanks very much. Okay, since we'll take that. We'll take that as a hint. I think just to start to close a little bit the discussion. I think that there's a lot of very interesting points that came out. Maybe also we would like to give some clear examples for who's sitting here on what is actually happening, what can be done now on nature-based solutions when we talk about business opportunities. And maybe one of the examples that pops in my head is about aquaculture and how like combining aquaculture not only on the fish farming in a sustainable way, I mean tourism aquaculture done in a sustainable way, and what's happening now on the global scale in regards to seaweed. I think it's a big growth sector. I think internationally there's more and more coastal communities getting aware of the opportunities that are out there on seaweed. Not only Asia, African coastline, that also has a big social impact. And so where we clearly see that it has an impact, a positive impact on biodiversity because of the importance of seaweed. It's a huge, has a growth factor, enormous growth factor, so also on absorbing CO2. And it's one of these industries that don't really have they're taking from the sea, actually they're helping to take the nutrients that are many times are getting washed into the seas by the wrong type of agriculture that's being used. And so it actually has also a repair factor, potential repair factor. Is there other examples that maybe you could think of any one of you, of other examples of nature-based solutions out there? Not only talking about aquaculture, maybe. Natalie, whatever.
Yes, now we are trying several solutions, not only seaweed or other. We also consider MCDR and like you said, ocean alkalinity enhancement or iron fertilization or other CO2 injections in the deep sea. The problem for the moment, we don't know exactly what will happen. So this is, for me, as a scientist, an issue because we still have a lot of research that is needed. We have a lot of knowledge gaps to fill. And so I don't know.
I'll help you on that.
Okay.
Not sure if this. Yeah. Could we say, or would we agree, if science cannot give us a clear answer, like every time science says, "I'm not sure yet about consequences," I would put a huge no-no. I'm just talking about like ocean mining as an example. Right? I mean, we are still missing so much information. And I think that if I put it on a scale of opportunity versus risk, there's a huge risk out there. I think there's so many examples on things that we're not really certain, and we intervene in that balance of nature. So far, we're just creating damage. And by maybe creating some solution that might help our own species in some way, we're creating 10, 15, 30 other disasters. So I'm not sure if we would agree on that, but I think whenever science cannot give us a clear answer on something, probably I would just step back.
I mean, my one sentence answer is do no harm. If you don't know what the consequences are going to be, then don't do it. You need to be very clear about it because the damage sometimes can be a lot worse than the problem that you're trying to solve.
I think that's absolutely true, but from a finance point of view, that means integrate externalities, make polluters pay so that they understand that the consequences of their damage comes back to them. So as we address, for instance, right now, the plastics treaty discussion, it is really important that in the plastics treaty, the financing mechanism is robust and has extended producer liability fully baked into the finance mechanism. And that will help us. But I think your nature-based solutions include things like having proper wastewater treatment before water ends up in the sea. And that's a lot of it is nature.
Absolutely.
And most coasts don't have sufficient investment there. So we are talking about multi-billion opportunity to invest in nature-based wastewater treatment. As for
infrastructure, as you said at the beginning. Absolutely. Thank you very much. There's another point that came out about maybe giving legal personhood to nature. I think we've seen examples out there. It's another interesting space to watch, and I think talking about what Torsten just said, polluters should pay the bill, right? I think this would be will be one of these points. I think in Europe, I think that it's leading the way in the last decisions on that. But I hope on an international scale this is going to broaden up. Natalie, you wanted to add something? No? Okay.
I mean, polluter pays principle is absolutely the way to go, but that in itself may not be the solution in all cases. In some cases, there may be nothing that you can do to redress the damage. So you need to be mindful of that as well.
Which, just to close off, and that's why it's important you remind us of that, there are areas where regulation is the right approach. So, which is sort of my answer on your whale strikes. I don't think ships should hit whales, and I don't believe we need financial instruments for that. I think we need proper regulation and good technology so that shipping companies know where the whales are.
And not only the shipping companies, maybe satellite technology. I'm not sure what can be out there on the. It's one of the risk factors of the high seas, but I hope technology can help us on that. So I thank you very much. I think our time is over, and sorry I didn't leave any questions to the audience. Q&A. Not sure if there's any comments out there that you'd like to ask our panelists in the last minutes that we have. Yes, please.
Yeah, thanks. This is a question for Torsten, but the Blue Bond Incubator, can you speak about that?
We see an attractive opportunity to bring the capital markets into this discussion. And capital markets are familiar with bond instruments, but some of the issuers need support in building those. So Aura, amongst its whole range of potential financial solutions, has set up a new structure called the Blue Bond Incubator, which will be available to assist issuers to engage in that space. And we are hoping that the blue bond space will grow by 2030 to something like 70 billion, which is a useful amount of money to come into the blue investment area.
Thank you. Exciting.
What are your thoughts on finance mechanisms for legal personhood?
A question too, Natalie. Torsten? Anybody? Everyone?
Yeah, because I don't want to answer because I don't really believe that legal personhood is really the solution. So this is why I prefer to.
There was a a while back, long before marine matters became a focus of climate negotiations, it was land and forests was the big topic of it. And one famous legal review article was, do trees have standing? Standing to sue, basically. And you have standing only when you have a personality, a legal personality, then you can go and then do that. So I don't know, it is a question of financial instruments as much as legal regulations that allow somebody who feels that this matter is impacting them or the community at large. Once the courts accept that, and if we have regulations for that, then whatever financial implications that are there would follow. But you cannot create the financial instrument without, first of all, according the legal personality to a thing.
That was a very legal answer. Thank you, Rava. No, but it's true, absolutely.
And I fully agree. And the financial answer to that is that there's some very rich children on this planet, because their trust funds give them lots of wealth, even though they are not able to actually run that wealth because they're children. There is nothing that would preclude trust funds owned by that legal entity that is created in that space and still managed, and that is exactly that issue of representation, legal representation, financial representation through others.
Thank you. Anybody else? Okay. Yeah?
So last year, G7 summit recognized the importance of avoided emissions, and for especially the financial industry and now the financial industry recognizes the importance of not only the risk KPI, which is the GHG protocol, but also the opportunity and the growth KPI, which is avoided emissions. So Torsten, you mentioned avoided loss. Could you explain the associated ways that something that happened in an emission area, and please?
Thank you. Yes, I would use avoided emissions is really the entry point from the climate world into that broader avoided loss discussion. And so if we link it with nature loss and the outcomes of Kali, we can really identify this larger concept of avoided loss and then calculate investment opportunities on the back of that. So yeah, I was very pleased to see that progress at the G7 stage.
Okay. I thank everybody, especially our panelists and Dr. Rama for hosting us in this precious space. And I think we've touched on many of the very interesting subjects. Watch this space. I think we should. This should lead us to the next UN conference in June, where we should expect some interesting news. And so I think blue economy as such, we demonstrate it should be very interesting in the future to watch, and lots of potential and opportunities, especially nature-based solutions. Thank you very much, everybody.